Hey traders, what's going on? Jamie Saettele here. It is March 1st, 2017. SB Trade Desk Midweek Strat webinar. And let me know that you can see the charts and hear my voice. And we'll get started once I have confirmation of that. Not getting any confirmation yet. Can you guys hear me? Can you see the charts? AV is good, says Mark Lavender. Okay, great. All right. Most important thing to follow right now. So we wrote about the yield situation a couple days ago. And it's amazing how that timing comes out, right? We had 27th, 0227. Markets flash warning sign, right? And this is how I read the newspaper, right? The questioning of the, if you will, inflation trade or reflation trade was being questioned literally right before it went into its strongest part, the blowout. Okay. And the failure of Japan's radical easing is right below it, actually, hence dollar yen too. But anyway, we're getting into obviously pretty elevated levels on on the S&P. Here's a short-term chart. So, full on blow off, like where, because we've seen what happens when you get even a minor dip. Like even a minor dip, you start to get, some jitters in rates and in the S&P. So in this case, if I go to the daily chart, forget the short-term stuff for a bit here, and the channel all the way back to 2009 in the S&P, the top of it is like 2430s. The bottom of it's 24, like a little above 124 or 2400. So, if there's going to be a hiccup, that's going to be it. The other possibility, of course, too, is that you go straight off, blow off, just nuts, while rates really, go through the roof again. And remember, this is for looking at the 30-year bond. Did you understand that 30-year, 10-year bond divergence that I talked about the other day when we had the 10-year at a new bond high and the 30-year was not? You understand how that all works? Well, so what we had with the 30-year bond yield is we came to support, and sure enough, this is actually an end-of-day chart. So if I update it intraday, this is what's happened. We've had the strongest 3-day rally in yields since the election, since back here, the last 3 days. Okay. Now, all in all, the dollar still hasn't done a ton, right? But this is the backdrop that we're really focusing on. So, I don't think it's smooth sailing the upside for yields, meaning downside for bonds, but yeah, you could go down for a little bit. If we go back to this chart, the big picture chart of yields, okay, if I go to the log chart, you can see that we're at a major level. And remember, the last time that we had any sort of major, right, rally in yields really was back after the financial crisis. And if you overlay that Okay, it's going to be a little different, but this could be, we could get something like this, okay, where we continue, we kind of like, flirt up here a little bit, get into FOMC, and then yields take another dump. So, my base case right now is that yields are going to stay elevated, bonds are going to stay down, the dollar is going to stay bid relatively into FOMC. Okay, and it's based on all this BS stuff I'm talking about with bonds, but really, I mean, let's be serious, let's be real here. It's really just based on the on this chart, dollar index. I mean, here we go. So continue to find support where we should, which was 12,309 or so. And we have rocketed higher from it. This would be, we're at the median line. Posted this morning, you got resistance right here at 12,400. We have pulled off a little bit. Interesting thing to me is that this was the election, and that was the breakout. Really, remember the dollar breakout, right? That was really the breakout. We're at the same level. So we might see some struggle around here for a couple days and then rip higher, right? What did I say? The 15th is, March 15th would be FOMC, which would be over here. So I should move this circle. All right. So looking higher, but yeah, we are into short-term resistance on the dollar. If we look at some seasonal stuff, right, for the dollar here. Look at DXY. What you'll see on this chart is that you can see the shaded bars are in, it means March. So March 1st here is shaded. And what we've got is, you'll see if you go back in time, you'll notice that there's a lot of really big turns in March, right? So 2015 high was March 13th, right? Fed day that year, March 18th, was right here. Really, really came off hard. Fed last year, the dollar came off hard too. Some of the biggest DXY top 2009 was March 3rd. The all-time low in the dollar index was on March 17th. The bear market really started in the end of February, March 2002 back then. And of course, the all-time high was very end of February. Bear market started in March. So you do get, it's one of the bigger turning points kind of around the middle of March for FX markets generally. All-time high, all-time low, 2015 high. So we're going to be focusing big time on, where the precise resistance is as we get up into Fed territory for the dollar. All right, let's move on to the individual currencies here. The euro, I'm not like, I don't know. It's, it still holds 105.30 every time we get down to it. It did this morning, because here's a cleaner chart. I mean, you can see right here, it's just a big level. Like this 105.20, 105.30 area just won't give way. I still think that euro is not a bad place to be on crosses. If we look at euro Aussie, it's coming bouncing from that low from back years ago, multi-year low. Although there's going to be resistance, remember, up at that median line, just below 140. Euro CAD's obviously turned up sharply the last few days. Euro yen, we'll look at that in a little bit. Dollar yen. Damn you, dollar yen. We had all the analysis spot on. We might have a fork to work with here short term. And I would be looking for support probably down near 113, right? Maybe a little above. We trade up to just above 114 today, but 114.17 is actually where you have daily reversal resistance, and that would be an area to watch. As always, it's much more important than the equity markets in the U.S. with dollar yen or the equity markets in Japan, okay, and also gold. And with those, you can see that we've got really good support. Posted that this morning on gold. And gold is bouncing, but remember, we're coming off of bigger resistance. I would watch about 1248. We're 1240, almost 1245 right now. 1248 is a high volume level in gold. It's a level to watch out for resistance basically today. You're still in an uptrend here, but again, we failed at a pretty big spot. Okay. You can make the case that you have 5 down. But there's a nice gold chart. Again, silver's at that huge resistance. Posted it in one of the updates the other day. Let's see. Silver chart right back into it, I believe. Yep. So still there. But yeah, the metals are a big time resistance. As is the bonds, which are coming off of big levels. All right. So as this pertains to dollar yen and the Nikkei, you guys, there's always when you're going to get a turn in the markets, you're going to oftentimes get a divergence. And this is the triangle in Nikkei that I've been talking about recently. Look, this is going to blow out to the upside, and it's going to take dollar yen with it. The thing is, this is the early year high in the Nikkei, right? Well, the early year high in dollar yen is like, above 118. And we're trading right now at 113.65. So the next big high, I think, probably will be, it could be all the way up here, but it will probably be with the Nikkei, not confirmed by a high in dollar yen. Okay. So here's the triangle. And if I go to the bigger picture, longer term chart, maybe get an idea of where the longer term resistance may reside. Hold on. Nikkei futures, hold on here. probably going to be up around 20,000. Maybe a little above, right? And if we take this breakout right here, you get all the way up near 20,758, which would be the extension. 20,350 would be the 1618. So that's pretty insane, but I need to do some more work on this to figure it out. Either way, the Nikkei and dollar yen should be headed higher. So the idea here is to buy dips with dollar yen. And I want to get into that. We talked about the basically, the area around 113, right? So, I mean, this confluence right here would be ideal, right? Coming in here, kind of form resistance, new fork, 25 line, which was resistance here. That would be ideal. But also, if you're heading into a strong trend, and we've talked about this before, but if you're heading into a good trend, something you want to do is watch for essentially your 24 period average, right? That's dollar max. It's Aussie dollar. Hold on. Okay, so if I can find the freaking chart. All right, this is cable. All right, so we want to look for just the 20 period, 24 period average, excuse me. Okay, it's currently 113.30. But every time, if you get down into that or near it, that's when you want to start really thinking about so-called buying the dip, right? That's kind of your average price. That way you're not chasing it. And you can see, when you get a real breakout, what that looks like. Like after the election, I have these little trend buy signals here. It's when you get a low in RSI over basically 18 hours. So we could be watching for something like that too. It's best when you have a very strong overbought signal. That after that you want to look for it. And we have an overbought signal. I wouldn't say it's exceptionally strong. It wasn't even at 80, but even so, all the stuff we're looking at, 113 to 113, 30 or so should be a good level to watch for support in dollar yen. And at this point, I would be putting stops under the high from today, assuming that we finish, up here somewhere, right? If you just look at a price chart, go to a 4-hour price chart here, right? Where are the levels? Like, 113.20s, that's been support before, right? You can look back here, 113.10, 113.20s. Right, that lines up with what we're looking for anyway. Okay, so you've got good stuff here to work with. To look for that that higher low. All right, and we'll be looking for that higher low to take us up to 1480 and maybe up towards, and maybe even closer to the year open. Although again, it's not necessarily the price at this point. It's just the time, waiting for maybe a blowout in the dollar into FOMC. All right, so that's some dollar yen for you. Let's move on to cable. Someone just asked about it. So remember, with cable, one thing you want to do is you want to pay attention to the FTSE. And if you go back to the videos, which I've kept the special reports, right? There was one on January 22nd. There was one on 211, but if you go back to the first one, it talks about how, and this is your perfect example of how markets really actually sometimes move where you think they're going, just not necessarily in the way you think they're getting there. We've talked about that a lot over the last, couple years. Like last year, for example, we had gold at massive resistance, but it just stayed there for like 5 months. So it's like everyone thought it was consolidation and going higher, but it was big resistance. Finally came off. It just took the election to make it happen. Anyway, so we have the British pound and the FTSE that we need to keep in mind. So remember, the FTSE is the bellwether, okay? The FTSE is the bellwether in the sense that I think it's signaling everything that is going on, with global stocks, okay, generally. So we're coming up into big resistance. This upper line up here, I'll show you what that is in a second, but if you've seen the video, you know what it is. Also, if you've seen the video, you know that in order for cable to come into a massive low, we need FTSE to come into a massive top, okay? So there are a couple levels to watch for a top. Notably, you've got, where are we right now? $73.88, okay? So just above 75, so 70, call it 75.05, so 73.88, 75.05, so 115 more points or so it looks like on the FTSE until you could get some sort of a sell-off. And if I go back to the bigger picture chart, here's the weekly, you know that level up there is just the channel, right? 2003 low, 2009 low, extended off the 2000 or 1999 high, excuse me. And that's where you get to. And then, the median line of that was actually the low from February of last year. So that's, a case to be made for looking for resistance or for the FTSE to roll over up near 7,500. And if we were to get that, then you're going to see cable, I think, find its low. And we'll look at the cable chart in a second. Where did I have I think this is the one where I have the comparison between the two. Is it not? Yes, it is. So remember, this was the special report that we had. And you can see that the arrows at the time, we were looking for a higher cable or a higher FTSE and into a top and a lower cable into a low. It just took its pretty time getting there, as February kind of sucked. Nothing really happened in February until seemingly the last day. So yeah, this is same idea. All right. So yeah, looking for that high in the FTSE, and that's when we'll get a low in cable. And then the cable chart itself is actually extraordinarily clean. So cable right here, wrong chart. Here we go. Okay. So cable, 240 minute, right? 5 up, A, B, dropping low into C. Basically looking for 122 to 122.30, okay? And 122.23 is 2 legs down. 22 even is lows back here, right? From January, early January, and then very late December. And then, of course, we have the beautiful former resistance line that's crossed these highs up here, including even yesterday, right? So from here, I'm actually looking to take a short, probably into 123.45 or so. So, we've made a low so far at 22.80, 2 pips above the year open. So shorting into this when you're coming off the year open, not the best thing in the world, but looking for a lower price into the next bigger level. So, 23.45 former low. You have these lows over here at 23.89, also a square root progression. As you can see, it was a lot of support for a while. And I would put a stop over the high so far today, which is 124.04. And here's another thing. Let me give you the volume levels because you've got a lot of volume levels right now. So you actually had volume levels during State of the Union last night. So State of the Union, you had a cable volume level. So you can draw a line over that hourly bar in cable, and that's your volume level. It's essentially where you are, trading against at this point. It's a very clear reference point, okay, to take a position against. So if you trade up into 123.45 and take a short, you at least have the knowledge on your hand that this is, you can trade against the level because you got good volume up here. And on spot, that's going to be 60-minute chart, the 10 o'clock close, 11 o'clock East Coast. Yeah, it's 24.45. Okay. I'm sorry, that wasn't State of the Union. This is State of the Union right here. Okay. This was yesterday morning U.S. session. Either way, that is a big level. Okay. Hold on here. There's that. Okay. Moving on to you did have a high volume level in yen for State of the Union. So State of the Union, you had one for yen. Did not have one for Aussie, although we traded into one. We had one this morning for Kiwi. And then the CAD one is up here at what it would be 32.40 in spot. We'll get to CAD in a second. So yes, with cable, would still be looking for that resistance at 23.45, and then looking for, again, another spill into 22.23. Look, with the, major 7,500 and FTSE at higher, a bit higher, I don't know if, cable needs to go a little lower or if this is going to be it down here. I'd like to think that you probably get a really good rebound off of this and maybe a minor sell-off in FTSE, and then FTSE later on goes to a new high, but cable at that point is doing its own thing and is up here. So I don't know, we'll see. But either way, besides being more or less dollar bullish probably until FOMC, cable, I'm willing to be bottom fishing down here at 122 ish, 122, 122.23. Okay, dollar CAD is a very interesting one. As you know, we've held the beautiful blue line support, and at this point might be headed for a test of 33.87 before it's allowed to pull back at all. If I go to a dollar CAD chart, Mark saying the chart I tweeted did not match the comment. Do I still think dollar CAD is a high to make? What do you mean? A high in which context? Like a high like up here, like up above 135, 136? Oh, yeah, so 133.87 is where I think that you could probably get, you'd start to get a top up at that point. Okay, how important the top is, obviously up for debate, but that's an area that I think I'd be looking to actually maybe sell into potentially. Okay, another thing with dollar CAD, so I noticed right before the webinar here that we did get a just extreme. So you see this RSI on 4 hour 81. Doesn't happen a lot, didn't happen all of last year actually. When it did happen was kind of during the blow off uptrend phase, right? Or middle of the uptrend or early part of the uptrend. Point being that it does tend to happen during uptrends. Okay, so it's an extreme momentum reading, so we should be looking into some sort of a peak. However, should be looking for that the weakness after that peak to probably prove corrective. Okay, and 33.87, take out that high, which is probably a obvious place for stops and everything else. That would be an area to watch for, to watch for resistance. And a subsequent pullback, at that point, you'd be looking for 32.10 support, which is just your clear former resistance. Okay, if you didn't get all the way back down there, the first level to look at is 32.44, which again is the high volume level from yesterday. But bottom line, all you kind of need to focus on, I think, is 32 or 33.87 as potential resistance level. Okay, 32.10 is potential support. Okay, so there's dollar CAD. Aussie dollar, the chart from last night we were looking at, Aussie's actually holding its own. AM short, you can see, talked about the long-term resistance, and the 10-day average I had noticed had been basically, for the most part, had been support, all the way up, right? And you finally actually closed below it for a few days. So after yesterday, I thought, why not just put an order to get short up here. Aussie, it's not really anything to write home about at this point. I mean, it's just consolidation, or if it's going to pull back, it's got to pull back from here. I don't, it's kind of frustrating. I think if you're either a bull or a bear, you're probably frustrated. Bigger picture, I'm a bull, but I'd like to get a pullback to buy it at a better level, and Aussie's just not doing that. It's not, every time it starts to pull back, it turns back higher. So, you'd have to question whether or not this is going to do anything at all, and see how the day finishes. Not sure if I'll be sticking with this or not. Kiwi dollar, you have a speech from Wheeler later. I'd be watching for resistance at 71.60, 71.70, and to take Kiwi dollar lower. Remember, we did get the top up here on RBNZ beginning of February. It then came off, and then like everything else, it did nothing for 2.5 weeks, and then finally it started to come off today. Looking at it as a break, so look for resistance at 71.60, 71.70. Be looking to take it lower, probably down towards 69.50. Okay, and again, these are your slope lines just based on the 2015 low, 2016 low trend line. Okay, and you can see all the nice levels that are hit. In fact, this one here, former support line, provided support earlier in February, mid-February. Would be watching that level for resistance over the next day. And again, Wheeler does speak later today. And FX-wise, that's pretty much it. We've got some interesting crosses that I think we should take a look at. So some of the yen crosses, obviously. Okay, we've got Aussie yen to look at, CAD yen, Euro yen. Here's Euro yen. Okay, Euro yen. ripped off this level. You're could see some resistance up at 120.54 and then at 120.133. Okay, obviously 120.133 is the bigger level. CAD yen posted this one yesterday, but it's an interesting one because you have the really long-term former resistance line. Didn't quite get to that support. Don't know if you will at this point. There's better crosses to trade than CAD yen, but interesting level. Aussie yen continues to hold up. I know a lot of people wanted to be really bearish on this, but this looks good. And you actually do have if you get a pullback in Aussie yen, you have support between 86.47 and 86.64 to head higher. And remember, this is an Aussie yen chart that I think I had looked at this a couple weeks ago, but this is an Aussie yen chart where I think we're going to come into a top, but it's not going to be probably until up at this point. You have levels at 88.80 and even 90.40 or so. All right. And remember, the 200-week average on Aussie yen is 89.50. It's right in this zone. And we've seen really big moves at the 200-week average before. All right. You even saw a top up here in 2010. I mean, some big turns. So the Aussie yen 200-week average, that is really something to watch closely, okay? That's something to write down. Alrighty. So yeah, my really lean towards kind of being long some of these yen crosses heading into the middle of March. Are there questions? Can we take any questions on other markets? Because for me, setups wise and what I'm looking at, that's pretty much it. I don't know if there's any other commodities or anything that people want to take a look at. Let's see what commodities are doing today. Oh, not a whole lot. Gold was down almost 1.5%. It's down 0.6 now, so not bad. Don't forget about the copper chart. That's a pretty big one when it comes to the whole global growth story and everything else. Right? We still have this big resistance up here. Okay? That hasn't changed. And the big support's still down here. That still hasn't changed. We'll take a look at crude. Mark's asking about crude. Yeah, so I think crude, and again, here's our example, right, of the market's going to get to where you think it's going to go. It's just going to take its own scenic route to get there. I still think crude gets up to 56.50, and that's where it tops. Okay, this is a log chart based on these slope lines, beautiful. Okay, support, resistance. Okay, I still think that's where we go to. The question is, where do we go first? Well, looks like the 52s, right? Remember, this is arithmetic, so you can just draw a trend line here and clone it, if you will, or copy it. Throw it right here, okay? And that level is the level to watch for support. So, for me, 52 area is support and 5650 is resistance. Everything between then, I really don't care to partake in, right? So if you wanted, you could try to be short up here. I mean, I'm sure that's probably been a pretty frustrating thing considering this price action. It's like shorting Aussie, right? Every time it turns down, you think it might get a leg, and then it just says screw you. But that's the deal with crude. And pay attention to crude, right? Because of dollar CAD. 53.78. If we can drop a little bit and see what dollar CAD's doing, if dollar CAD is either up around 33.87 or at the year open, then it might be worth looking at a short position. Again, this is just the trend line back from here to here. Okay, I don't know if that's going to hold because it's just 2 points on the line, but it should at least be noted. Although the other line to draw would be this one. Well, it's essentially the same thing, isn't it? It's a little higher. Remember, the reason you draw that is because this was kind of a spike, but that wasn't a spike like I've seen others. That was a real market back then. Anyway, Mark, so I hope that makes sense with crude. Essentially, big downside potential at some point, but if we look at that chart, it screams, the log weekly chart screams that resistance is at 56.50. Let's look at some other crosses. So look at some euro crosses. So like euro pound, for example, right? This has held up really well. We were looking for the support last week. We've held up, headed higher. Your resistance is probably going to be up here somewhere if you get it, 87.20s or something, right? This agrees, if you will, that with the notion or the idea that you're going to have, cable head a little lower, or the euro is going to hold up, or both. Euro CAD, good turn higher. Okay, your resistance, really level to watch, probably the lows from back in, the summer of last year. Okay, if not up at these highs up here. Again, same thing. It says kind of lean towards upside on the euro against CAD. So like dollar bullish, but euro might hold its own. Euro Aussie. Okay, have bounced again from, remember, the low from 2015. And then, of course, the median line is still higher, right? So, Aussie has been strong too, of course. But euro has held its own so far, and I would be looking up towards, I would not pay as much attention necessarily to this little trend line here, right? Again, it's 2 points. It is off the spike high from December 30th. Okay. So it's the median line. That's the big thing. Okay. And Draw it off the close, that might help. But the median line is the big deal here, and it's still going to be up around the 39.60s at this point. Okay, all your big levels for these markets. Oh, this was our draw. This was our drawing from a while ago, right? Yeah, linear chart. This is the weekly chart. You can see we're looking for that bounce and then a turn lower. And then Aussie Kiwi, which has gone through the moon. Here was the, actually we did come into the median line yesterday. So this fork is still doing its thing. Might have 5 waves up here though. Let's see. Five waves up, it looks like, doesn't it? From here to here, pull back in 3, holds the RSI 40 region. Going to get a bullish outside week for Aussie Kiwi. Again, just pay attention to Kiwi with Wheeler later. I think it'll be worth it to try and sell Kiwi dollar if you get a bounce back up into 71.60, 71.70 or so. That was this chart right here. Yeah, so 71.60, 71.70, okay? Any other questions of note? The biggest thing, guys, is really just pay attention to the dollar index chart. I mean, heading into mid-March, right? This is the chart that's helped us at least be the right idea of when to be bullish the dollar, support. You're going to want to be bearish the dollar up here. Right here, you're pressing into short-term resistance. I do think we end up breaking it. You could consolidate around it for a few days, just like we did after the election. All right. But we'll be looking for a top more than likely some point in 2 weeks in the dollar. Until then, would lean towards being bullish the dollar with exceptions, including the pound dollar if it comes into 22 and whatnot and gets a bounce. So, all right. Anyway, hope this all makes sense and helps. And thank you all for attending. I'll get this archived up and posted to the website ASAP. And once it is, we'll get it out to you and I'll let you know that it's up on Twitter. Okay. All right. So thanks everybody for attending and have a great rest of your day and week. All right. Talk to you later. Bye.